that budget days haven't been volatile for the markets. In the last many counts, you will see that the market has given you that swing of 2 to 3% on a budget day. But the important thing is the positioning of the market before and after budget. Typically, the pre-budget time is what dictates what's going to happen after the budget. Now, I must remind you guys here that in just the last 1 month, that is just the 20 days so far this month, the Nifty itself has scaled up 4%. And I'm not even talking about the overbloated SMIDs, or at least, you know, the concern pocket within SMIDs, or the kind of valuations that some of the individual sectors are sitting on. So that's the kind of trend that we've seen. And the trend so far is indicating towards perhaps some easing off of positions. At least that's been the data that's been suggesting that we're going into the budget with a little bit of light positions. So maybe some correction could be on the cards. Who knows? That only Nirmala Sitharaman is going to dictate. But that said, you know, Nikunj, one often wonders, like you were also highlighting, what is it that the markets are going to be liking? Continuity, stability, nothing on the capital gains tax. I think that's going to be top of mind on every market man to not press that, you know, immediate trade button, to see some stability come by at least. And that's exactly what we've been talking about. Fiscal discipline, judicious spending. It's not that, you know, a completely populism nature is going to go down well with the market. The market does understand, like Nikunj was highlighting, that a rural spend, some amount of rural outlay is par for the course. That's the need of the hour. But an extra or concentrated push perhaps is something that the market is going to be looking out for. And of course, manufacturing push. We've all seen the kind of capex outlay, what it's actually done, the PLI schemes, etc., for equity markets in the various segments. So continual push is something that the markets would be pleased about. What the markets won't like, you know, like I said at the top of you know, the show right now, large amount of spend directed towards states where there is a weaker government majority. I mean, states like Andhra Pradesh, Bihar. An increase in capital gains tax, of course, is going to be a no-go for the market. As good as it may be for the longer term, you're bound to see some knee-jerk reaction coming in there. And of course, you know, potential tightening of F&O trading. Now, this is something, Nikunj, that both the regulator, the finance ministry, perhaps all the powers of corridor have been talking about. But what route they actually take to try and curb the retail spending or retail participation in F&O, options trading in specifically, that's something that the street is really looking out for.
So let's understand the market positioning, Aisha. Markets have run up, but have markets run up in anticipation of a big budget? The answer to that is no.
Absolutely not.
But if there is any incremental changes in the tax rate, that is something which markets are not prepared for. If there is a change in the long-term tax duration, which is 1 becomes 2 or 2 becomes 3 or 1 becomes 3, I think there could be a knee-jerk reaction, but markets would digest that. Then is the F&O part. The F&O part is something which is budget the right forum to really get it addressed? Maybe no. So honestly, markets are not expecting that anything incremental will come, at least on that front in this budget, because that is house and that is hygiene keeping, and you know, budget is not really the forum. But interestingly, the positioning of the market is such that markets have gained a lot of weight. And some fat is something which markets really need to shed. Could budget be that occasion where markets use that as a trigger? Not in terms of news, but in terms of just an event risk. Event risk is over, let's take some games off the table. That cannot be ruled out. Historically, the importance of budget has got diluted over the years. But this time, this is the first budget of the new government. It is coming at a time when markets are at an all-time high. They're looking for a reason to correct. Could budget be the reason for it to correct? Maybe, maybe not. I'm not so sure.
Yeah, absolutely. Okay. And who better than the who's who from the market corridors, from India Inc. to answer exactly that. What's the budget going to mean for India, for the equity markets, for India Inc.? And I'm going to hand it over to Anisha in the studio.
If you like this video, then like, share and subscribe to ET Now.